Hi everyone, welcome to my channel. I'm Doris. I'm here to show you about my stock account and today's market update. Today, let's talk about the Japanese stock market. In the past few episodes I've covered, in one of the episodes probably earlier this month, I've talked about how the Japanese stock market has been performing relatively well in comparison to its recent years. And just recently, the Japanese stock market just returned to the peak of the history. This week, the Nikkei 225 index surpassed a historic high in the late 1989 of 38,957. As the Japanese stock market returns to the peak, the original unmoved local retail investors finally began to sell. About 20 million NISA, which is called Small Investment Non-Tax System accounts, have been opened in China, and people in their 30s and 20s appear to be taking the first steps to make an investment. Earlier this year, the Japanese stock market reformed the NISA system. Now it has further coverage and will be permanently tax-free. Among them, the gross NISA investment tax exemption limit was expanded to 2.4 million yen. The regular investor NISA was expanded to 1.2 million yen. Analysts believe that the NISA will perform a role in shifting personal financial assets from savings to investment and help the stock market. The Japanese retail investors are buying NISA accounts through a record rate, which the introduction of the new NISA system, with high dividend stocks such as Japanese tobacco receiving particular attention. The wild influx of foreign investors is seen as a potential driver of the current rally in the Japanese stock market. On net buying throughout January, foreign investors bought a net of 378 billion yen of cash stocks on the main board in the first full trading week of February, according to Topix data. In Japan, however, many investors still remain wary. Early evidence suggests that the products deposited in the Japanese account were either American stocks or global basket rather than domestic stocks. This is partly due to the trauma of the bubble burst in 1989. And many Japanese still think the stock market is only slightly risky than casinos. Wall Street News previously mentioned that the older retail investors have experienced a transition from the bubble to the bust because they have a stronger sense of risk aversion. After 25 years of deflation, they tended to hold cash close when stocks rose and contrarian, so it seems not easy to get older investors' deposits to push Japanese stocks up. Meanwhile, Japanese retail investors in their 20s and 30s tend to be more interested in stocks because they have experienced market boom during most of their adulthood. As concerns about the sustainability of social welfare programs, many people are using the NISA accounts and other tools to accumulate assets. Mr. Tomoshiro Kubota, a senior market analyst at Matsui Securities, said the application for opening a new NISA account have doubled the same period of last year, with administrative process barely keeping up. Behind the new high, the fundamentals of the Japanese stock market structure and its economic structure, composition of stock investors have been completely different from the original. Analysts pointed out that it is ultimately driven by earnings or continued improvements in corporate earnings. The Tokyo Stock Exchange have been for years inactive corporate governance and improve its income statement, and in January asked it listed companies to voluntarily propose business plans to improve capital efficiency and warned that companies that do not use their capital effectively could face delisting as early as 2026. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.